What's everybody? You guys hear me? Does my microphone work? No, I'm in the stream. Let's try this.
Wait.
Loud and clear, it says. Okay. Nice. All right, Tom's in here. Very good. What's up, Jason? Jeremy, Cyborg Investments. That's a cool name. That's a cool name. Oh, yes, Vican is here. What's up, Ken? Yeah. All right, we got some super stonk OGs in the chat. Like to see this? Yep. Let's see. This is my first time using like YouTube's like direct interface here. So I'll tell you guys in a second. We'll get some more people in why I decided to do this, but let's see. Kind of do like my person to person thing. That'd be cool. Yeah. Let's see. Now, how does this work? Oh, nice. And I show up in the bottom there. Okay, good. Good. Yeah. I guess I can only just do like little me, right? Yeah. I like I know, right? I know. It's pretty cool. Yeah, it's pretty cool. Like we got it's like we're real people, right? We don't have to have this like several hour delay between chat responses. It's pretty cool. Yeah. Ooh, good question. Yeah. What's the chance of a market maker fake out and we rip after earnings? Like, I mean, we definitely could. We definitely could. I would say, I talked about this in my video a little bit yesterday. It's like we can definitely do that. But part of like, I don't know why market makers would want us to close over $30. So like we definitely could rip. To the stop share for now. We definitely could rip, but we're definitely going to get an IV crush regardless if we get a rip. I say definitely, right? I've never seen that. I've not seen that not happen. That happens under pretty normal conditions basically all the time. So that's going to happen. If we rip, like I would still think like, right, if we go back up into like that upper bullish channel and like, I don't know, run up to like 32 or something like that, I would still see us closing below 30. Just because we haven't had a week to do that. That would also be a 7th green week in a row. That's, I don't even know if, I don't think I've seen that happen on GME ever. So it could happen, but I mean, it would require some sort of like crazy settlement event, like in the background, or like a swap doing something. Like if a swap comes due, that's what I would think. Yeah. It's just like you can, right? Because we're doing everything probabilistically. We're thinking in terms of probabilities because we're thinking in terms of betting, right? What's something I want to commit to? What's something I don't want to commit to? Want to commit to the things that seem to be of higher probability, or if they're lower probability of comparative return for the loss, right? Risk reward, cost benefit analysis. So, we could do that, but a little bit. It's an uneasy bet. I'll say that. We stop minting coinage, then the price of all metals will become so expensive that your children will never be able to afford a home or a car again. Hello, Simple Rick. Are you in character there? Very good. Oh yeah, we can see if we get halts, right? If this becomes like the kitty live stream. No, I doubt that. I'll be pretty happy if we have like, it's pretty cool to see like 30 people in here. What are our numbers right now? How many people we got in the chat? We got 28 people in the chat. We got 28 people in here. That's very cool. That's very cool. Definitely fewer halts though. Definitely fewer halts. Yeah. Yeah, pretty chill day before earnings. Like exceptionally flat so far. A little different than my regular breakdowns as the market is open. So can take a look here. What happened here? What was this? Oh, that was a little short volume. A little short volume there. Can share my screen for a little bit. Little thinker action. Yeah. See? You guys see what I'm talking about here? I'll talk about this a little bit, but right, like this reads as short selling to me, right? This is like somebody went out, borrowed 100,000 or 150,000 shares, and this was a short trade, and then this is a buyback pattern, right? We're on the 1 minute chart. Zoom out a bit, right? I like anytime I see this type of pattern, especially like right at a technical level, that's just like, oh, so like that's clearly a large pile of shares that were just borrowed, that were broken up into a bunch of smaller orders, fed through an algorithm, and then moved off a technical level so that they don't get sent to, part of it is like, okay, is the market maker like actually, are they routing this order or not routing this order on purpose? Or is it like whatever hedge fund or institution or whatever is doing this specifically has whatever algorithm they're using to trade, like break this up into small orders so it doesn't get routed to a dark pool? Don't know. But yeah, that's what that is. Like you can see it. It has that pattern. It's always conspicuous because it's got these big candles right here, right? This candle's 130,000 shares. This one's like 80,000 shares. So we definitely had at least 200,000 shares of volume, like straight selling in 2 minutes. Yeah, that's a short. That's a big short share dump. Especially like you can go over to the options data and like, because somebody could, for example, just like sell a bunch of calls or I guess buy a bunch of puts, but you don't typically see that going on. Yeah. Cheers, Diswag. Thank you for the compliment. Yeah. It's good to be hanging out with the community. Yeah. Oh man, more people joining than I thought we might. Very good. 37 in the house. We'll get started in 3 minutes. I'll send a little reminder over on X to friends. Where's my, here we go. No. We're just we're hanging out, Dan, before we get started. That's all. Talking about maybe a little bit what's going on. We'll get started officially in next minute or so. Disco Milani. Yeah, Jeremy, could be XRT for some of that. I don't know. I think some of them just like they just go directly and borrow from who's ever got shares on loan. Like sometimes they don't even do it like discreetly, you know? Carl's here. Nice. Good to see you, Carl. All right, everybody. So we'll go ahead and get started. Yeah. So today I decided to go ahead and do the open interest newsletter breakdown live today. Usually I use a platform called Streamyard. Streamyard is pretty cool. It does allow you to stream, but it's also pretty good with recordings because I can like move myself around the screen. I can be sort of big, go back and forth. I really like it. I used it for my recordings. I started using it with this 21st Century Renaissance podcast I've been kind of tinkering around with for close to a year now. I really like the platform. It's what I used for these first 4 or 5 videos that I recorded over the past few days. The site, for some reason, is having an issue actually parsing the audio portion of the recording. So I have 2 versions of today's video that I already recorded, but there's no sound. It's just me completely silent, talking to a screen and a camera like a lunatic. So rather than post that, and because there's no sign from StreamYard that that's going to be fixed anytime soon, we're gonna do things this way. So yeah, so we're gonna talk about the topic of today's article, which is bears bang the close. Talk about what I think we're gonna see price action wise going into earnings today after market close. I think 4:30 is our official earnings drop date, something like that. So thinking about some of that, I'm gonna walk you guys through some of the things that I look at on a regular basis to figure out how to do price projections, like actually how I do my price movement forecasts, which, hey, I do it in a way that makes sense to me in a functional model that's made me into a profitable trader month over month for just about, full time, certainly for half a year now. I'm not even that active of a trader, actually, but it's enough to support myself. So, I mean, you can use these analytical methodologies too. I have invested some time to improve myself, to improve my ability to do it. But if you guys can learn these patterns too, you can take these with you into if you're doing trades or you're trying to figure out decisions to make independently for your investment. If it's in GameStop, if it's in something else too, right? This will work. Like the methods that I use work for any traded stock. I just happen to focus only on GameStop. That's the only stock I trade and have traded for the past 6 months. So it's the only position I am invested in too. I don't just trade it. So yeah, so let's get into today's article. Let me bring this up, share my screen. I have to be small. I can't do the slightly bigger me. Yeah, let's see. Can I do it this way? There we go. You guys can see that. Yeah, so today's topic, right? Bears bang the close. Let's see. Here's what I want. No, that's not what I want. Is it this? It's this. No. Hold on. I can't find the actual tab now. Here we go. It's right here. There we go. Here it is. So now I can scroll. Okay. So you guys know I start off my newsletters by trying to think about what happened the previous day and how that sets us up for going into today's trading day. So the main issue or the main sort of, let's call it a theme or what's going on, it looks like in terms of today's trading or heading into today's trading, was a clash of these 2 regression channels that I've been talking about. So this larger bullish regression channel that we've been looking at since basically, yeah, since the day before National Cat Day. So the VW squeeze anniversary was on the 28th of October and National Cat Day the 29th of October. Wouldn't you know, we had the start of our bull trend beginning on the VW squeeze anniversary, perhaps in anticipation of National Cat Day. So we've had a bullish regression channel forming, pretty big, that has been intact basically this entire time for the past, I guess it's going on 6 weeks now. Yeah, 6 weeks. And we've seen it come into conflict with this bearish regression channel, this sub channel within this larger bullish regression channel since the day after Thanksgiving. So for my non-American listeners, that's going to be November 29th, day after our Thanksgiving. So yesterday we saw a price pattern. We saw some trading that looked very familiar to what we saw. This would have been last Wednesday. So mostly flat. We traded up to start the day. You'll remember I pointed out in yesterday's video and yesterday's article to watch out for a bull trap. We did get something like that. We got this sort of middle scenario, not a crazy bullish scenario yesterday, but we did get that test of $30. So right here, this particular price level here that's formed by this lower VWAP band. So these bands, you'll see these in a lot of my photos. I can break this down a little bit for you. This blue line every day is that day's volume weighted average price. This is an important level in terms of, well, certainly when there are forced settlements, like if accounts get margin called and they are unable to close their positions or properly fund the account, what'll happen is if you have to sell to close a position or buy to close a position, whatever your broker is or whoever is actually managing your accounts will force through a VWAP order to bring you back to proper status if you're in a state of margin call. So they use the volume weighted average price in order to push through those orders. So for example, say you're leveraged in your portfolio, you're long and you're double long because of your leverage, and whatever your positions take a big hit and you have to close, you get a margin call, you got 24 hours. You don't put enough capital to bring you back up to positive status, and you're too much in the red with respect to your margin loan. The brokerage will come through at the end of 24 hours, or if it's way more serious than that, and just force whatever position you still have open, will force it through a VWAP order. So whatever the volume weighted average price is, it'll just go through and close the position at whatever that price is. So whether that's buy to close or sell to close. So because of things like this, VWAP tends to be an important statistical marker with intraday trading. So scalpers use this a lot. The likelihood that the price will move more than 2 standard deviations above or below the volume weighted average price in a day represents less than, or it's probably in aggregate, like the integral of it would be that the amount of time that would happen would be an integral of all the area. Like if you have a normal distribution, it'd be the integral of all of the area above 2 standard deviations above the mean or 2 standard deviations below the mean. So that comes down to, like, I don't know, 98.6 or 99% of the total curve of a normal distribution is not there, right? So what that means, if you're a trader, if you're doing day trades, which not necessarily recommending this, because this is an ideal statistical situation, not necessarily how it plays out every time with every stock on every day. But day traders do have an iterative system for making this work for them. If once you get these VWAP bars kind of set up, if you move 2 standard deviations away from the volume weighted average price, there's a very strong likelihood that you will revert to the mean. Same thing when you go up. So you can do sort of, day traders, scalpers will, scalp options contracts in particular is what they do a lot of. Off of these measures. So, but for my purposes with respect to understanding price movement, that's a major component of it. But what you'll see too, this green line here, would be 2 standard deviations below what the volume weighted average price is. That line in the early part of today also lined up pretty well with the 54-hour moving average over on our chart. Let me see if I can bring that up. Since we're doing this live, we can bring that. Yes, Dan, highly unlikely. Yeah, let's bring Thinkorswim back up. See, let's hop on over to the 4-hour chart. Yeah, so this white line we have here, I don't know how clear it is. Let's see if we can make this a little bigger. I'll get rid of IV for now. Yeah, that's clear. So you'll notice, right, we had this white line here has been trading pretty sideways for a number of days since our sell-off post-Thanksgiving. And that's been sitting there right around, 28.65. So during yesterday's trading in our first 4-hour candle, let's head over, like you can see the position there, right? 28.65. See a little clearer. Ooh, that's a little messy. Zoom in a bit. Yeah. So it would have been right around here. Right? A little higher. A little higher. We traded off something like that, which kind of lined up with VWAP pretty well. So we had a confluence of these two levels. It also lined up, as you'll see, right with the bottom of our bullish regression channel. So this made for an important intraday level. And after several tests of that, we moved straight up for a test of that $30 call wall overhead. Let me go back to article here. All right, so we move right back up to that $30, a test of that $30 call wall. We got this kind of bull trap kind of a thing. Not sure how much of a design trap it necessarily was, but we did get this big up movement to, I don't know, either allow a number of people to kind of just sell calls into this IV depreciation here. We've seen a continuation of this later, but really the kind of the star of the show, the star of the show here in terms of what happened later in the day was this conspicuous dip, which went from where the 54-hour moving average was largely situated. We had, there was like 1, 2, 3, 4, 5. So this would have been like a fifth touch, maybe if you want to include that one too, of that level, of that price level. And then right when we were going to touch that level again, 28.50, all of a sudden we get this huge hundreds of thousands, like 350,000 share volume in like 3-4 minutes. And we dump all the way down until we find support at the bottom, the lower bound of this bullish regression channel, which also happens to be our $28 call position there, call gamma position. And then we just traded sideways into the close. Okay, so what was that all about, right? Like that strikes me pretty clearly as some form of short selling, targeted short selling with an intent to push the price outside of the bounds of our bullish regression channel. I don't know for certain exactly who borrowed these shares or where they were borrowed from. We do have some evidence that there was some settlement of borrowed shares later in the evening. Ultimator's been writing about this. There has been a lot of this movement in the evening, so it's hard to tell if this settlement was particularly because of that or if it was because of some big short sell order that occurred during the day. As somebody suggested in the chat, right, these could have been shares that were borrowed from an ETF like XRT or something like that. It's hard to say for certain, but that pattern that I talked about, I think before we started the live stream full time, was it really looked like some pretty intense short selling to do that. And it turns out that when you do that into the close, just like this, that's actually completely illegal. You can't do that, but it happens a lot. So I would say that one of the things that improved my trading, helped make me into a profitable trader, say, present Michael versus past Michael, was assuming that these types of things happen on a regular basis. And by assuming that happens, it actually made my model a lot more functional. It made my sort of risk calculation a lot more a lot more functional kind of in my head. So don't know for certain, but good to take that stuff into account. So in terms of why someone would go ahead and do this, it looks to me, as it looked to me last week, heading into Thursday's trading, the reason why somebody did this last Wednesday, so shorting and then rerouting a dark pool, rerouting a bullish order, a big order at the ask of 144,000 shares, rerouting that to a dark pool so the demand didn't get introduced into the lit market, was specifically because there are bears, right? There are bears who are invested in ejecting us from this bullish regression channel. Roaring Kitty's, or I should say the algorithmic reaction to Roaring Kitty's tweet back on Thursday, pushed us back into this channel for another 1, 2, 3, 4 days, 3.5, 4 days, which cool. It meant that we weren't on this same super sharp bearish trajectory. I think the way that it was drawn up before, the upper bound of our bearish sub-channel here was lined up with the 24-hour moving average, simple moving average right here. So obviously this made this, it transformed it, forced it to be a lot shallower, didn't maintain the integrity of this upper trend, didn't have to reposition this trend at all. We've respected that pretty well. But it seems like bears are doing the same thing. Whoever is bearish and trying to push the stock down really seems to me wants to push the stock into our deeper support here at 25. Now it's around 25. It would have been around 24 if it happened the end of last week. Wants to push us into the 204-hour moving average, this deeper support. And if we look at how the options market reflects that or lines up with that, if we take a look, for example, at our gamma exposure, our market maker gamma exposure, we can see here that so this is a market maker gamma chart, a gamma exposure chart that I mark up myself based on these values, right? Concentration of either net positive or net negative, so net call or net put gamma. We can see that the way that this is forming up, we have this bifurcation in terms of characteristics. We have these two kind of brackets that have two different hedging characters to them. And it turns out that they overlay pretty much exactly with our regression channels. So like one of the things that way improved, I would say, my ability to reliably and consistently predict reasonably precise, like precise enough to be a profitable trader month over month, is being able to look for the confluence between technical factors and information in our options data. So if you're trying to figure out like, okay, where do I think the price is going to go? What seems like the likely scenario? Can I narrow down my prediction into 2 or 3 scenarios at most that I think are maybe equally likely, or one slightly more likely, one slightly less likely? If you can do that, right, you can be a really effective trader, right? Anybody can speculate, like you would see all the time. Some people would do on Superstonk. They'd be like, tomorrow, $79, right? Really, really low probability of that happening. Maybe, but extraordinary claims ask for extraordinary evidence, and a lot of the time we wouldn't get that type of evidence. Or you can predict something accurately, but you can't have the precision to be able to trade meaningfully off of it. Like, for example, if I would just come out here every day and be like, okay, guys, really, as I look at this, we're looking at, I don't know, somewhere ending the week between $35 and $25. Well, that's not a very useful, right? That's not sufficiently precise enough. It's probably accurate. It's very accurate. I could say that basically of every week for, I don't know, the past couple months. It's going to be somewhere between, I don't know, maybe not $25, but for the past few weeks, that would be accurate, but not terribly useful to trade off of, right? Not sufficiently precise. So being able to compare and apply technical perspectives and options perspectives, being able to read options data, especially market maker hedging data like gamma hedging, being able to put these two things together, if you can find places where the data lines up, that can really, really improve your precision without sacrificing your accuracy. That's the trick, right? Ideally, you want to push your precision as far as you can. You want to be as precise as you can, but you don't want to be precise at the expense of accuracy. Because the danger that you run into with precision is that you lose accuracy, because you get so precise that you miss the target, right? It could be very precise, very specific, very tight range, but it could miss the target, and then you're not accurate. If you're too accurate, you just, it's like you take a shotgun. You'll hit it, but maybe you'll hit it just a little bit, and that's not enough really to sustain you as, maybe as a trader. Okay, so as I mentioned, if we look at our gamma exposure data, we have this bifurcation in our characteristics of our likely trading range, and these brackets, basically this bracket from 28 to 25, where we can see we have two pretty decent call gamma exposure positions, call gamma dominant positions here, bracketing this more neutral area. That lines up pretty closely with our bearish sub-channel. And at 28 to 33, right, we have all of this concentrated, nice volatility suppressant call gamma dominant accumulation, right? All of these strikes are very call gamma positive, which means generally it means the possibility for more bullish trading, since there isn't a lot of risk of ostensibly of price collapse. Now, you can dump 1.5 million shares like we saw happen after Thanksgiving, and that can play spoiler to some of this, but that, again, that's a 95% of the time that doesn't happen. That's why that took a lot of people for a loop last 2 weeks ago, right? And 11/29, and then that 12/2, December 2nd, right? So 28 to 33, and then 28 down to 25. And if we go ahead and take a look, keep doing this. No. Here we go. If we take a look back again at our regression channels, right? So right here, right, we go up to about 32. If we're over here, if we extend all the way up, we're at just about 33 up here. And it bottoms out right around just north of 28 now. In fact, we've got the 104-hour moving average is moving right around 28. So that more or less frames our bullish regression channel. And then our bearish regression channel, still a little bit above 28. It's around the 54-hour moving average. And then the lower bound should be just about crossing 26 now. But in the next couple of days, right, it's going to be moving down pretty close to 25. So, right, so we've got this confluence of these two channels, and we see market maker hedging is structured around accounting for the potential predominance of one of those two channels. Now, in terms of when or for how long one of these channels or the other would assert themselves, it looks from, let's say, our OI data. If we take a look at open interest changes, total contracts that are out in terms of the options market, we can see that, okay, one of the interesting things, something that if you had a chance to read the article, you notice stood out to me immediately, was we had 3 put positions expand pretty notably. I mean, we usually see around 30, something like 1,000 contracts or 2,000 contracts. That's pretty normal, a mix of selling and buying, right? 33 is a mix of selling and buying. 29, that's pretty normal. We do see that on the call side. But to see 1,000 new contracts at 28 for puts, 1,200 at 25, 1,200 at 23.5, that doesn't happen really frequently. And that hasn't been the case in our bull trend, that we've seen that type of expansion of put OI to that extent. What's also interesting is if you go into unusual whales, in fact, we can do this. This is what I do to check sentiment. Let me see if I can head over here and show you how I'm looking at stuff here. Let's go to our OI chain. Yeah, so here's today's chain over on unusual whales. And yeah, so there's these little tabs. If you guys use it, this is not sponsored by Unusual Whales. But this is just to give you guys an idea of how I use this platform in order to get an idea of what's going on in the options market, right? So this should come up here. Yep. Right. Oh, interesting. Here we go. 12. This was actually, these were sold short. This is for, no, this is for not today. Right. This is what I saw. So this is for today, actually. So somebody sold 500 puts today. That's cool. But yesterday, we had 1,000 contracts come in at the ask. So yesterday, this was a put order. This was a long put order heading into earnings. We'll see if maybe, maybe this guy was closing out half of his position or something, decided that was a little too risky for him. But that's a big bearish bet. Okay, that's a bearish bet, and that's even stronger than, say, selling calls, because you have IV and Delta crush, right, because of IV working against you as you head into earnings. So as you come out of earnings, IV is going to hurt a long put in terms of its implied volatility value. It's Vega. Then Vega is going to, because of the decrease in Vega, that's going to affect the Delta. That's measured by Vanna. You're going to get some Delta crush from the loss of Vega in your put. So that means you're betting on a pretty big and pretty quick movement down in terms of gaining some intrinsic value in that contract, especially something so short dated. So that's what we saw at 23.5. It was almost entirely at the ask. At 25. Again, this is 2 days. So this is back here. We got some bid, but we did get this. Got a number of pretty big orders. Hard to know on the mid ones, but shifted toward the ask. This includes some of today's data, unfortunately, no, because it's a little bit later. But right, it's biased towards the ask. So these are long puts. I think that might also be the case for the 28s here. Yeah, biased towards the ask. Oh, we got some pretty big puts at the ask today. So long puts, they're pretty bearish. But the good news here is that these are only into this week. If we go over and look at OI changes for next week, we don't see that, right? Not yet, anyway. Very few puts. Not even that many calls traded, but, right? So it does, I would say, based on our price position, we're pushed just out of that bullish channel. We are seeing some bigger, more convicted bearish bets come in, some riskier bearish bets. I would say that it does look like, at least the way that the chart is forming up, it does look like we are going to trade down into earnings. If we look at our max pain data, we can see, okay, $27, not bad, right? That's not super bearish. That still suggests we're gonna, be somewhere in the upper 20s toward the end of the week as far as satisfying market maker profitability. But it does look like maybe we consolidate a bit, or move, kind of stick around. If we move down to 25, 26, we might hang out there for another week. I mean, that would continue to kill IV a bit if we just kind of go sideways into December 20 OPEX. Maybe a good opportunity if we are going to get over equal. At least this is what I'm thinking. Like, I'm trying to envision this scenario, because if we do get this, that might make a good opportunity to enter in for build out another extend the long position at a price lower than the premiums we've been seeing in this upward bull trend, in this bullish regression channel. IV is going to make entering something like April calls, if you're betting on something like a January recool. If we get, say, a 13D from Roaring Kitty on December 21st, just like we got a 13D from Ryan Cohen back in December of 2020 after the quarter 3 earnings, after he bought, right? So think about this, right? After GME traded down following the quarter 3 earnings report in 2020, Ryan Cohen doubled his position at those price levels after we traded down. So this is a question, right? Maybe, maybe this time you cover thing was something of an intimation that Roaring Kitty is maybe starting to accumulate. Maybe he's trying to, I don't know, maybe he's doing something, maybe it's somebody else. Who knows? I'm not going to speculate too wildly, but this does present an attractive re-entry point for people maybe who missed the boat the first time around. It does offer some deep stability. We have a confluence of, we've got gamma support, gamma hedging support, call gamma support there at 25. We've got the 204-hour moving average at 25. We've got the 50-day moving average approaching $25. $25 is a historical point of support. It's the top of basically our entire trading range from July 17th all the way to National Cat Day. I think even through National Cat Day, I don't think we necessarily reached 25 on National Cat Day. But through that whole period, this whole sort of like the end of our bear trend and this consolidatory period between, say, Q2 earnings and National Cat Day. So if we're going to get something like a recall situation, if we are looking at something toward the end of January or some cool price action in February, if we're thinking, if this recall means slow ass conditions, business transformation in 2025, 2026, like, this could be an attractive pullback area to reposition, to say, go a little bit more risk on, depending on, what your strategy is, something like that, depending on who's out there. You can bring in some more people who are not exhorting you to do that. I'm saying, right, this might be attractive to investors who like GameStop, but don't like it, say, in the 30s, but they might like it a lot around 25. So something like that. Yeah. So that's the article today. I go into some of this in a little bit more detail, but gives you guys a good idea about what I was thinking about going into today's training. Oh, did something happen? Oh no. Did something happen? Could you not see my screen? No. Oh, that's so funny. Could you hear me at least? Oh no. Today is not my day. Oh my gosh. All right, but you could hear me though. Oh my gosh. Why was it black? No. I was very locked in. Yeah, it turns out it was the second half of the live stream was a podcast today, friends. Oh man. This is tough. I hope StreamYard gets its thing back up. Like I said, if StreamYard can recover the audio, then I can put that back up. But hey, I appreciate y'all. Wow, we actually ended up having 60 people in here listening to my podcast. Well, now that you can see me again, do you guys, the least I can do is stick around for some more questions if you guys are interested in anything like that. It is a live stream, so we can do that. Oh, man, yeah, I was sharing the screen. Why was it black though? Sad. Well, I need to turn in you pull up the stream with your phone. Yeah, it's tough because I'm using my phone actively as my camera. Oh, I didn't consider that. I do have a second laptop. I have an older laptop, so it might even have a better GPU. So maybe I could use something like that. Yeah, I gotta get some. I gotta get something like that. Yeah, if you guys have any recommendations for how to optimize a setup here, I'm all jacked up to you get canceled, you're all like, oh, wow, I better talk about what I want to talk about even more now and see if I can reach more people. So if you have any suggestions on how to improve my setup, definitely. I know Ken is a tech wizard, works with live streaming, so definitely would invite that. Deswag asks, are there GameStops in Poland? Yeah. Hello, Jeff Jolly. Welcome. My name is Michael. Your name is Jeff Jolly. That's interesting. Deswag, more specifics on my strategy. Yeah, so I mean, my main strategy in terms of GameStop is I layer the position. So I would say that because I am betting on the fundamental transformation of the company, like I think the company will, there's this 3 to 5 year improvement scenario, something like that Roaring Kitty talked about back in May and June. I have a share position that I've been building up for some time that is based on that, right? I don't know when that time horizon is. That could be, that's something that accounts for like a slow as situation, right? So that's something like what Tesla did between 2019 and 2022. So nobody knew how high that thing was going to go. So it was like, if you bought shares at the bottom or you were working into that and then you just held for however many years, 3 years, something like that, right? You saw something like a 3,500% return, but nobody knew how long that was going to take because nobody knew how long it was going to take for these synthetic shorts to actually get out of the position. And the way that these synthetic shorts were extracted, I guess, from their positions was that gradually Elon Musk issued shares, and yet the price of the company kept increasing. So this gave these legacy shorts the ability to exit, their internalized trades by buying up portions of this offering, right, and sort of putting their what would you call them? I guess their fake shares to bed, like putting actual serial numbers or something or tracking numbers on their fake shares. So yeah, so there's that, right? I have that layer of the trade, and I especially went pretty hard on building out that position once it was like with all the cash that was raised. Like there was a decent case for the company beforehand, but it was still like, ooh, we're trading down, don't love these prices, like earnings don't look awesome yet. And then Q4 was like, oh, okay, profitable on the year, and there's 900 million in cash, burn rate's not bad. Okay. And then the May, June stuff happened and the company ended up with an extra 2 billion in cash. And then the company ended up with an extra 4 billion in cash. And now it's the total position is 4.6 billion in cash. It's probably going to go up. From there, it's like, okay, yeah, trying to account for this Tesla situation, which Roaring Kitty even talked about back in the fall of 2020. So there's that. But then it's like, okay, how long is it can actually take for that to get underway? What do you do in these consolidatory periods? How do you make sure that you get your good buys, and how do you trade in a way so you don't miss these upward volatility events, but also in a way that allows you to generate some capital off of your investment so that you can continue to build out your position. So you're not just like stuck there being like, okay, it's going down and now it's up and now it's down and now it's up and I'm not really anywhere. I'm not closer to, say, my sell target or something like that. And so what I do is I have a very basic wheel strategy. So what I do is I replace anybody who knows the wheel, right? Like you replace limit buys and limit sells with covered calls and cash secured puts. So it's a perfect hedge, meaning I am completely delta neutral on my position. Whenever I sell options, I sell stuff that's usually pretty far out of the money, and I look at the gamma hedging data generally to guide my sales. So I was able, let's see, how much did I generate on my portfolio? I would say between July and National Cat Day, I generated about a 16% return on my portfolio that then I rolled into long calls at those IV bottoms in October. So like, and then those went up obviously in this bull trend. So like what happens is I try to size my positions based on not based on my risk scales to what I'm actually able to generate off of the underlying position. So I have this like different levels of risk, different methods of trying to increase the value of the portfolio that then I can reposition and adjust depending on what I'm seeing in the options data, depending on what I'm seeing in the technicals where I think we're going to go. So those are kind of my 3 layers that I work for, that I work in and out of right now. Jeff, because somebody asked me, my friend, so this is a question and answer period. This is where people can ask questions, and then I will then answer those people's questions as a courtesy to them. That's what we're doing here on the live stream. So you can't do that if it's a recording, because I can't see a chat, but I can see that here. Does that make sense? I don't know what else to say. But anyway, does that make sense to you? Who asked me this one? It was DeSwag, right? Does that make sense, DeSwag? Cool. Yeah. Is it possible RC bought Bitcoin a while ago? I guess it's possible. It's possible. I don't know. I don't know. I thought maybe he was like going to do something with Alibaba for a while, because that was a pretty cool play, and they got rid of short selling on mainland China. They outlawed it, so that's why Baba like pumped. Yeah. What would I consider low IV? Well, in October, I considered low IV yearly lows. Right? It was the lowest we saw to date. So I was like, there's probably a good chance. And like, I was waiting on Cat Day. Anybody who goes back to Supersonic with me knows that I was waiting on Cat Day for a long time. How many posts did I have where I always had that as like the thing in the bottom of my post, right? I was waiting. I don't know when I noticed that. That was like, I mean, really, thanks to somebody on Supersonic, right? I have to give credit. It's not just like me inside my own head, just like kind of logically deducing everything that goes on. Like, part of why communities are great, like why like, hey, the era we're living in terms of being able to access this knowledge, like everything I've learned about trading, I've learned in investment and everything, I've learned entirely online. I've learned through YouTube. Okay, I had to go through some, not everybody is of equal quality on YouTube. There are people who are better quality on this stuff, who can talk way better on this than me, for example, right? The quality is mixed, but if you can get a sense of who's better quality, who maybe is not. Online resources, online communities, stuff like that. Like, it's incredible what you can learn. And Supersonic was great. Like, yes, you have to weed through, 50 hype posts before you get to, something of substance. But then, like, when that thing of substance hit, it was usually somebody like, I don't know anything, but like, what about this idea? And then I'd say, what about that idea? And then I would go just like research stuff and do that on my own. But Supersonic was great for that. I mean, it still is. There are still people there who are posting cool ideas. It really sucks that so many people have been removed from there by what seems to be maybe some unsavory elements. So, yeah. Let's see. Cheers, Dan Swim Show. Thanks for stopping in. Can you look at how to interpret GX data in order to know which channel the stock would trade? Well, see, that's the thing. You can project a sort of bearish scenario or a bullish scenario. You can kind of use maybe like RSI to get a good sense of that. But it also kind of lines up pretty well with the technicals. See, this is the thing. You can't know the future. Like, some of this depends on what the options volume is going to do, like what institutions want. If we're approaching if our price is close to a big call position, like, we're up close to 30 heading into earnings, like that says to me, we're probably going to go down because market makers are the counterparty on something like 90% of trades that are made in the options market, right? So you might think that when you go buy a call, like, you're like, oh, let me buy these calls. You might think that your counterparty, you're getting paired with another trader. Most of the time, you're not. You're getting paired with whoever the designated market maker is. They're just buying whatever trade you want to open. They're just buying it from you. If it's a trade they don't want to take, I think they bias short trades over long trades. Then they'll like route you over to somebody, unless they can get a good deal on the spread, on the bid-ask spread. But they're generally the ones who are in that trade. So when I look at that $30 call position, there's 15,000 contracts. It's like, okay, the market makers don't want that position to expire in the money because that they have to make sure they buy shares to make good on those share delivery obligations. They don't want to do that. So, I mean, if you see something like that, right, that can be a sign to tip you off and say, okay, there's probably going to be some stuff that's going to encourage some trading down, maybe into, say, if we see a bearish channel going that way versus a bullish channel. But if you see stuff like IV is super low, right? Like back in October, why did I think middle of October was a great time to enter into long calls for GameStop? It's like, it became very difficult for me to make meaningful amounts of premium by selling short calls. It's like, man, I got to sell calls like way out, and I'm getting like in a month, I'm collecting in premium what I was collecting for, I don't know, a week. Like, selling monthlies or selling something 2 months out versus selling a weekly before, the Q2 earnings report. If I see like a difference like that, that tells me like, oh, market makers, now their profitability is being jeopardized because IV is too low. So they're going to be okay with things getting a little bit bullish with IV jacking up a bit, because then they can make money by selling things that are farther out of the money, that have lower probabilities of expiring in the money. That's going to way boost their profitability. Okay, like, yes, bull trend, some more calls are going to go in the money, but like, they'll be selling so much stuff that's way out of the money at crazy inflated prices that they're not going to care. So you can get senses like of pivot points like that when you're like, all right, what if I were a market maker, like, what would I want to see happen that would help my profitability? That's what I try to think. I mean, I kind of ballpark it. I don't do calculations or anything, but yeah. Who are some of my favorite follows for real information? So if you're looking on like Superstock, I do like, Ultimator puts down some good stuff regularly. Region Formal has been pretty good with these like blue text bubble things. They're pretty regular contributors that I would say offer some sensible insight, right? They're not just like, oh, here's another chart again, here's arrows, and so we're going up, right? Not very substantive. Like, okay, maybe, but that's not very substantive, right? Just technical analysis, that's like, just technical analysis, I would put as like an analogy to just hearing something. Oh, I heard this, right? You want to think about having multiple ways of approaching, of like multiple inquiry frameworks for approaching what you think might happen. You want to try to have as many as you can, right? You want to have multiple factors. You want to have multiple dimensions, maybe mutually exclusive dimensions for analyzing the same, the same context, right? So just like you think the human sensory apparatus, we have 5 main senses that are pretty mutually exclusive of one another, right? Seeing is pretty different than hearing. Hearing is pretty different than touch. Touch is pretty different than smell, like they're really not that correlated. They don't seem to be that correlated, but you sort of pentangulate whatever you're looking at with all of these different senses. So if you can do the same thing, if you can come up with 3 or 4 or 5 different inquiry frameworks for approaching a question with what you think is going to happen, like if you do this in science, this is what scientists try to do. Good scientists anyway. Good generalists as well. So like if you can get something from the humanities and something from art and something from biology and something from anthropology and something from psychology and something from statistics, and like all of that kind of converges on this whole, then you have a pretty good idea that what you're looking at is a real phenomenon in nature, and that it's something that you can count on to give you some sort of predictive validity. Same thing goes for this, right? If you can look at something from the options data, and you can look at something from, you know, swaps data, and you can look at technicals, and you can look at, right, all of these different things, then you can have a greater degree of confidence than just doing things at random, that you have some predictive, whatever you're looking at has some predictive validity. So guys like Ultimator or Region Formal, they look at stuff that's not just TA, so go up. Like the TA can be helpful sometimes. I had to learn how to do TA at some point, but then after you learn TA, it's like, all right, this is it, right? What, you know, it's not reliable enough on its own. I mean, you can do some pretty cool things with TA, but I wouldn't say it's reliable enough on its own to, you know, do anything except, like, if you can build yourself a pretty good metagame for day trading, like maybe you can make that work for you. But anyway, that's my particular approach. So I like those guys. Obviously, go watch Richard Newton's channel. Like, Richard's been, you know, daily doing streams or doing videos. Like, he's put together that spreadsheet that's super detailed. He has a ton of information. Richard's really great to look at. And then if you want to know more about like where I learned my approach to reading market maker hedging information, like understanding how that works, I learned all of that from Spot Gamma, so a group called Spot Gamma. They have some free videos out online, so they're really good. I would also go check out their, I've posted this in 1 or 2 of my articles in the past, but I would go ahead and check out their breakdown of look up like Spot Gamma GameStop 2021 squeeze. And they'll give you a breakdown of what really happened that sent sent GameStop critical. Like the options induced component of that Thomas Petterfee was talking about back in that February 2021 interview. So they're the ones that I think got that pretty great. And I mean, for me, the proof is in that I learned their analytical frameworks, and I use their analytical frameworks to give you the analytics and write-ups and stuff that I do all the time. That's where I learned this type of analysis from. I've never seen anyone else talk about this besides Spot Gamma. And the fact that nobody's ever approached me and said like, oh yeah, I know what you're talking about with respect to this market maker gamma hedging stuff. Like, I don't know anybody else who knows that. So as far as I'm concerned, probably a major reason why I got deplatformed from Reddit is because that might be a very close to the chest guarded secret in terms of what information industry professionals use in order to come up with real trading analytics, something like that. So go check them out. Where do I look up my IV data? Yeah, it's from Alpha Query. I'll put it in the chat. So obviously I do like intraday, right? So like, what's it called? Thinkorswim, Schwab, like provides reliable IV data. Like it's there, but what happens when you go to different resolutions of the chart is it auto aggregates the data into that resolution at the chart. So if you zoom out to like a year, the IV data sort of smooths with either the day or the 4-hour framework, and it's not as visible. Alpha Query is really good because you can take lots of different, you can cut up that data and display it on a chart a lot more clearly. So I subscribe to them so I can do that. But you can access you know 3 months, like the 3-month data on like 3 month frame 10-day mean implied volatility for GameStop, like you can just get for free on Alpha Query. So Jeremy, would you elaborate on your question? Could you do a full video on that topic? That's right. I use 10-day mean implied volatility. It's just easier to visualize, I think. It was specifically to look at this sort of like earnings appreciation trend that I look at. Swag, that's so cool. I didn't know you were doing your PhD. Yeah, absolutely. Absolutely. Let's see. Other questions. Tom, yeah, Tom, I would do this again. if you guys like it. I do, maybe I could do something like this. Maybe I could do like a weekend live series or something like that. I know I wanted to do like some like deeper dives on like not necessarily connected to my articles, but concepts like I sort of elaborated here in the chat. For weekend video topics, maybe to kind of go a little bit more broader afield, maybe talk about some theoretical stuff, or I have some ideas for what I'd like to do this weekend and for the next couple weekends. So, yeah, I would definitely do this again. I do like. I mean, do you guys like the? It seems like. Do you guys like the sort of these like 25 to 35-minute videos that I've been doing the past few days? Is this easy to engage with? It seems like it. I mean, I've been getting pretty good exposure via the YouTube algorithm, so I might stick with that as long as I can get StreamYard working. But to do like a stream like once a week, if you guys like that, I can definitely put that together. Very cool. Very cool. Thank you, Brilliant. Dennis says yes. Robert says yes. Max, yes. Lives are informative, pursuer. Okay. Okay. Cool. Then yes. Jeremy. Oh yes. Okay. So yeah, I'll talk about like my experience learning from spot gamma and thinking about market maker gamma hedging exposure. Yeah, I can do something like that. Yeah. And Noodles also likes the 20 to 30 minute. Cool. Yeah, we could do like a Sunday stream or something like that, looking at the week ahead, or we could do like a like a Friday after market hours stream, like reflecting back on the week and something like that. Yeah, that's a good idea. I'll strategize about that over the next couple of days, maybe this weekend, and come up with a plan in addition to these videos. But yeah, okay. So I think we'll bring today's stream to a close there. Your questions are great. I really appreciate your feedback. Feedback's so important. If you have comments or questions on the article, on the regular videos that I do, please go ahead and throw those in there. I'm super happy to be able to get that feedback, because I can mull that over. I can take those ideas. Like I said, I don't just cook up everything, rationally ex nihilo, everything sprung from the head of Zeus, like Athena. I really appreciate having ideas and taking ideas and being able to mull over ideas and thoughts from people around me. So that's one of the things I really appreciated about Supersonic, and one of the things I appreciate about you guys, for those who are joining me on the YouTube and the X front. So please keep the comments going. If you have a question or something that you want to DM me with, go ahead and you're welcome to do that on X. So yeah, thank you so much, guys. Thank you for a great, I guess, inadvertent first live stream here. Hopefully I'll be back to the normal video format tomorrow. Hopefully StreamYard is up and going, but if not, then yeah, then I'll, you'll know, and maybe we end up doing another thing like this. So thanks very much, guys. Have a great rest of your Tuesday. And hey, yeah, we got earnings report coming out in just about 3 hours. So fingers crossed. Yeah, great podcast. Yeah, thanks, Jeremy. Sorry about going to black there. All right, guys, take care. Enjoy the rest of your day.